Hi, my name is Romeo Chico. I am a CPA with Paymaster Payroll Service, and today we're going to cover the W-4 form and how to complete it and avoid any pitfalls where you may have to owe taxes at the end of the year when you file your 1040. First, a quick disclaimer: these slides are for discussion purposes only. This is not tax advice. I am not your CPA, so your results may vary. I'm here to give you some guidance on how to avoid, but you should consult with your tax preparer. Uh, just to give you a little bit of a history of income tax withholding, I prepared this chart a couple of years ago and did a 30-year look back as $500 of wage on a check and how much the respective withholding is on that check. And back in 1988, if you were paid $500 on your check as a single individual, you would have had about $82 withheld just for federal income tax. That's before Social Security or Medicare taxes. And we can see over the past 34 years or so, that has dropped down to I don't know, even less than half of what it was 30 years ago. So our income tax rates have gone down drastically. I've updated this chart to 2022, and you can see as of this year, it has gone down even more significantly. So, for example, someone earning $500 a week who is single and claiming one, back in 1988, you had about $61 withheld, and for 2022, you are about having $2 withheld. So it is a drastic drop. So getting this form correct may save you from having a large tax bill at year end. The reason for this is government wants to put more money into your check each payday, so you have more spending money throughout the year rather than accumulating a big refund at the end of the year. So their goal is more accurate withholding. But of course, with accuracy, you need to be accurate in providing the government with information. The old form was, you can call it straightforward or easy, but it may have been easier than you thought it was. Of course, you put in your information at the top. You select whether you're single or married. And most people equated this number of allowances with number of children or dependents. But in fact, it wasn't number of dependents or children. It was allowances. 0, the most amount would be withheld from your check based on the tax table. And the greater that number of allowances were, the lower the amount of withholding. So some people would put 10 allowances or even 99 allowances and have basically 0 withheld from your check. Of course, you may end up paying at year end. But what most people didn't realize is that this was not the entire form, although your employer may have just handed you a photocopy of this first sheet. But there was actually another page that provided you with the calculation of how many allowances you had. And then there was another page with accounting for deductions and amendments or adjustments. And then you had another page with what if you had more than one job. So there were all these different tables that you used to fill out that form. Well, now we come to the 2020 and later W-4 form. It's mostly on one page, as we see here, and the top of the page is kind of no different than what it's been in the past. You have your name and social security number, and you are checking a box for your status, your filing status, single or married filing separately, married filing jointly, or head of household. And many people stop with just that piece, similar to the old form. But here is the piece that caught many people off guard in these past years. It does say complete steps 2 through 4 if they apply to you. And many people didn't realize that those steps applied to them. So kind of zoom in on the next piece here, and that is step 2. There is a lot of writing in step 2, and there's a lot of instruction. And this tiny little checkbox, which we see here over on the right, and most people miss that checkbox. And that is a hugely important checkbox. What all of this instruction says is if you have more than one job, or you're in a household and you have more than one income, so you have a spouse and the spouse works, this box needs to be checked. And not checking it can cost several thousands of dollars at the end of the year. And here's how that affects you. This is a tax publication. It provides you with the ability of seeing what your income tax withholding is. It is what payroll systems use for calculating withholding. You can search for publication 15T. And if you go down to page 11, this wage bracket, what you'll find is several tables similar to this one. You want to make sure you find the table that is for your correct pay frequency. So here is the biweekly table. And when you go down the table, there is a section for married, head of household, and single. So if we go down this list, and I kind of jump ahead here to someone earning, let's say, $1,000 biweekly gross pay on their check. Well, if you're married filing jointly and you don't check that box, you will have 0 tax withheld on that check. And it's right there. There's a big 0. If you check that box in step 2, you're going to have $52 withheld on that check. And $52 withheld on each check throughout the year is going to add up to a significant amount. So if you're married filing jointly and you and your spouse both do not check that box, you are going to be under withheld and owe about $2,500 at the end of the year. So you can see how that little checkbox has a big role in your income tax withholding. Now that checkbox, if you just check it, it does say in the instructions that is assuming that your spouse has the same gross pay as you have, that they're equal. You can simply check that box. But if they're different, if the spouse has a higher amount or a lower amount, or there's more than 2 jobs, so you have a second job or a part-time job, then you have to go to the second page of the W-4 form. And here you will find a worksheet just for step 2. And it will go through the numbers on what if you have a second job or 3 jobs, or your spouse has a higher paying job. Note it is on the second page, and it says right at the top, keep for your records. So as you fill in your other income here and spouse income, you're not actually giving that information to your current employer. But you're going to fill this out, and that's going to give you a number at the bottom that you're going to fill in step 4 back on the return. Here is the next part, or step 3 and step 4 of the W-4 form. Another pitfall that some people come across is, again, thinking back at that old W-4 form, it was the number of allowances, which people translated to number of dependents or children. On the new form, it's actually looking for a dollar amount. If you have 1 child that is a qualifying child, you're going to multiply $2,000 by that child and put in $2,000 on this line. If you have 2 children, it's $4,000, and so on. If you have a dependent that is not a child, so you have a parent or grandparent, then that's going to be $500 times the number of other dependents. And that will go here. And those 2 amounts will total the amount on line 3. This is your total amount for dependents. The employer is going to take that amount, put it in the payroll system, and that's going to factor into your withholding. The An amount here on line 3 is actually going to lower your withholding amount. There are some other boxes. They're self-explanatory. If you have other income, maybe from investments or a side business of some sort, you can enter that amount here, deductions. Or lastly, if you just want extra withholding, we would see a number of people submit a new W-4 form with extra withholding because they just thought their withholding was too low. So if you are one that you like getting a large refund when you file your taxes in February or March of the following year, you can put some extra withholding on there in order to bump up your withholding per check. Now, it is still a bit complicated. There are a lot of boxes here, and if you want to be sure that you're putting the right information and having the right amount withheld, the IRS does provide a calculator. This is the website for it, irs.gov/W4app. If you don't remember that, you can go to irs.gov, and right on their homepage, if you click on Pay, you will find the tax withholding estimator. And what that is an interactive calculator. It's going to ask you a series of interactive questions, starting with what is your filing status. It will go through your income. Be sure you have a copy of your most recent check stubs in front of you, because it will ask you questions that are on your check stub, such as year-to-date wages, year-to-date withholding. It's going to do a true catch-up if you've been short up to this point of the year. At the end of the process, you are going to get a screen that is going to tell you exactly how to complete your W-4 form. So here we see it's telling me to select single or married filing separately on line 1C, and it determined I am short of my withholding, and I should put an extra $39 in additional withholding in order to get caught up throughout the rest of the year. You should perform a calculation at the start of each year. Wages change, tax tables change, your personal situation may change. So it's not a bad idea to use this calculator in January of each year, fill out a new W-4 for that year, and hopefully your withholding is accurate and you don't come up with a big tax bill come tax time when you file your tax 1040. So that is our webinar for today. If you have any questions, you can reach out to our website at paymaster.net. And up at the top under resources, you can go to W-4, and we provide some instructions there. Or, of course, irs.gov, and you can find a lot of resources there. Thank you. Have a great afternoon.